Okay. Okay, so let's start our seminar and webinars today. So let me do a briefly introduction to you about our company first, and I will be your MC for today. I'm Brian. So if let's say you have any questions, do feel free to ask all of us. We do have another colleagues outside. If anything, you can just pass by and ask them lah. Okay. Okay. Yeah. Okay, so before we start, as usual, we have to make a disclaimer. So basically, this presentation did not reviewed by SC, which is Securities Commissions Malaysia. This is just a briefly introduction, or just this is not something like advice. If let's say you are looking for some finance advice, you should look for your financial advisor and so on and so forth lah. Yep. So for our company, basically, Phillip Capital are incorporated on 7 October of 1995, which is a wholly subsidiary of Phillip Capital Holdings Sdn Berhad. As if let's say you are one of our clients before, formerly we are called Phillip Futures lah. But nowadays we call Phillip Capital because we M&A with AIBB, with Alliance Investment Bank. So we start our stocks business. We are trading participant of Bursa Malaysia Directive Berhad, and also a participating organization of Bursa Malaysia Securities Berhad as well. And of course, we are the holder of capital market service license, so we are some sort of like guarantees by SCs lah. About Phillip Capitals, we have a lot of office around the world, not just around the world, around Malaysia. As you are standing here today, or the person who are watching online, here's the HQ of Phillip Capitals, and in Klang Valley we do have another outlet, which is Kota Damansara branch. And other than Klang Valley, we do have Alor, Penang, Melaka, Kuantan, JB, Sarawak, and also Sabah. So I would like to take this opportunity to all our clients or non-clients. In the past few years, we did get a Bursa Excellent Awards lah. So without you guys, we cannot have this achievement. And last year, we got our Best Retail Directive Trading Participant as a first runner-up, and second runner-up of Best Overall Directive Trading Participant. So about our global networks, you may ask what the specialty of Phillip Capital. Basically, our mother company in Singapore, so we allow to access to different kind of exchanges. because in all around the world we do have Philip capital in their countries such as like France, like Australia, Vietnam, Cambodia, Japan, even though China, of course Malaysia, Singapore, United States, and also United Kingdom. So here is the coverage we cover about for futures trading lah. So we not just only offer Bursa Malaysia, we also offer SGX, which means the topic we are going to talk about today. And other of that, we still have Hong Kong Exchange, Japan Exchange, Euro Exchange, and also US Exchange lah. Okay, why you should choose Philip Capital? Because Philip Capital we provide different type of products. First of all, we have futures, equities, and also contract for difference. For futures, there's few categorized. There's index futures, agriculture futures, metal futures, energy futures, and also interest rate futures. For stocks, we have Malaysia stocks, US stocks, Hong Kong stocks, Singapore stocks, and also Australia stocks. And for the contract for difference, you might be not familiar with these CFD things because this CFD thing in Malaysia is not that popular because I see they have giving out how to say requirements that is very high for Malaysia to trade CFDs lah. If let's say you are interested in CFD, you do also can find us because in Malaysia we do have just few brokers that are only able to offer CFD, and Philip Capital is one of it. And for the CFD, we have Bursa shares, NYSE shares, Nasdaq shares, and also US index CFDs. Philip Capital is one of your broker of choice because we are the award-winning brokers. We have 24 hours brokering education execution support, which is 9 days lah, because we do offer US stocks and US futures. So we have to provide the 24-hour brokerage. And advisory service, of course, we do provide some sort of like coaching session. It's a one-to-one coaching session. We can customize what you need and do a session with you, no matter it's online or offline. Next is latest market news, wide array of product, and also online account opening. So basically, this is the thing that I say earlier, which is the free one-to-one coaching section and free webinars and seminar, which is everyone attend today, and also a free account opening. So for free one-to-one coaching, we can provide you if let's say you are totally new to investing or trading, we can provide you an introduction to futures, CFD, and also stocks trading. Other than that, we also provide the product knowledge and platform coaching and also the charting system, more to technical analysis. Okay, so here is the QR code. You can just scan the QR code and register for our next webinars. Not just webinars, because in the coming 15th of July, we do have our conference, and we'd like to invite all of you to join the conference with totally free of charge, because we do have a voucher code for all the attendees and so on and so forth. If let's say you are interested to join the conference next month at Berjaya Times Square, feel free to approach us. Okay. Yeah, good. Hope to see you soon. Okay. So here is the weekly market call. So basically, we have 2 weekly market call. The first one is market view and update. The second one is the more to live counter technical analysis lah. So here is the QR code. But no worries. Later you can still come to us, and we will explain to you and invite you to the group or what lah. Okay. Just now I said about online account opening, right? For right now, we just have our futures account. Online account opening, which is, we call it OAO lah. Online account opening, OAO. We have our futures OAO, but in the coming next month, we will start our stocks OAO lah. So here's the thing, and it's totally free. Yeah, so you can just open it at anywhere. Okay, let me briefly introduce you about our trading platforms. So for the first one, this is the futures trading platform. We call it Philip Nova lah. So this platform is made by our Singapore's, and they are using Philip Nova to do all the trading in one platform, no matter it's futures, no matter it's stocks, no matter it's CFD, Forex, and so on and so forth. But Malaysia cannot trade Forex, as you know. But we are looking forward to have everything in one platform to make our clients more easy to trade the instrument that one. So this is the platform we trade for the stocks. Currently, we have 2 platforms. The one will be more focused on foreign stocks. The other one will be fully local stocks. So for the foreign stock, it will be Poems Global MY, and for the local stocks, it will be Philip Trade. So as you can see, we do provide different kind of exchange. As you can see here, Malaysia, US, Singapore, Hong Kong, and also Australia. So by just using these two platforms, you're able to trade all of it. So for the next one is the Philip CFD Trader. So yeah, it's basically almost the same with the stocks trading platforms, but it's to trade CFDs. You can short in CFDs, but you can just only short in US CFD. Malaysia are not allowed to short. Okay, so before we start our session, let me introduce you about our promotion. Yes, we do have a promotion called Trade and Earn with Philip. No matter you trade at what products you have, or maybe you like to trade futures, stocks, or CFDs, and you trade more and you will receive more rewards from it. So by every 3 months, we will give you the rewards by time to time. Yeah, so it can be total earn up to 1,800 ringgits until the end of the years. No, there's separate things. Uh, yes, but there's some requirements lah. You have to trade. There's some TNC behind. Yes, correct. Okay. So for the next one is cooperated with Singapore Exchange, which is XGX. So they provide us some rewards to all our clients lah. So no matter how, when you trade Singapore stock, you are able to entitle for the Touch and Go e-wallets for 300 ringgits. But this is randomized lah. It's not say that you trade more, so you have higher chance to earn more. So everyone have the equal rights to earn to get the rewards lah. Other than that, the most traded clients will receive a iPad Pro from our side, and the campaign will end on next month. Yeah, 31st of July. So try to grab the chance to win the iPad Pro lah. I also want the iPad Pro. Randomized, which means no matter you trade how much, no matter you trade how many lots, you will still be able to entitle for the Touch and Go reward of 300 ringgits. It doesn't like, or you trade more, then you will receive. No, no, no. KL stock is no, because this campaign is mainly for SGX. Yes, correct. Okay, lastly is the US index CFD lah. Basically, this is to let you guys know we have the product of US index CFD and as low as USD2. USD2, which means the brokerage lah, because previously it's quite high, so we decided to earn more lesser to encourage people to trade CFD and learn what the CFD is. Okay, yep. So before we pass to our speaker Benny Lee here, so let me just have a briefly introduction about our speaker here today. So Benny Lee is a seasoned trader, author, and a renowned speaker in equities and commodities market. With over 18 of experience, Mr. Lee frequently delivers speech at local and international conferences such as Securities Commission of Malaysia with SC and SGX Academy lah. He provides market commentary for various media outlets, including the Edge Business Daily, Borneo Post, Bloomberg, Business Times, The Age, and also Bernama. So in 2014, he co-authored the popular investment book, Keep Investment Simple and Stupid. Simple and stupid is two different things for me. So currently, Mr. Lee holds the position of Chief Market Strategy at Equities Trackers Holding Berhad and serve as a advisor to Malaysian Association of Technical Analysis, which is MATA. He holds a bachelor's of in business management from the UK. So without further ado, let's pass to our speakers today, Benny Lee. Thank you.
Thank you. Hello. Is this working? Right. Okay. Sure. Oh, there's a camera, is it? Oh, hello. Hello, everyone online. Okay, very good morning, everyone. Whether you're in physical here in Philip Capital HQ or in online. My name is Benny, and thank you very much for the introduction, Brian. We also want to thank Philip Capital for inviting me to come and share with you about Singapore market. Right. I have quite limited investments in Singapore, so I'm not really a market expert, right, in Singapore. But I just want to share with you a few facts and information that you can make use of, so that you may want to consider looking at in the Singapore market. So basically, why I'm here, because I'm part of the SGX Academy speaker, and that's the reason why they've actually asked me to come to basically present about the Singapore market, lah. Right. But before I go, let me just introduce who is Equities Tracker. I'm basically an Equities Tracker, as you can see my T-shirt here, right? Okay, but before I start, have anyone already invested in Singapore shares? Okay, maybe about 20%. Okay, good. So hopefully after this, it'll be like 50% of you guys or 80% of you guys starting to invest in Singapore. And now that Singapore, I think we Philip Capital have a campaign for Singapore trading, right? Okay. So as any presentation, there's always have a disclaimer, lah, right? Whatever is being shared here today is for information and educational purposes only. It's not intended as any investment advice, because if you, like Brian said, if you want to look for investment advice, you have to look for a licensed or professional financial advisor, lah. Okay, so Equities Tracker, what do we do? We are actually a 47-year-old company. We started business of getting financial data, right? So we have data actually from Malaysia, Singapore, and also Australia, lah. Yeah. Oh, okay. Then better stand here. Thank you, Jarif. So Equities Tracker, we try to help investors grow their wealth. We are an education provider as well. So 40 years ago, because you look at 40 years ago before internet, lah, for us to get information to invest is very low, right? It's very minimal. Nowadays, you can get information on the internet easily. Right? You can even ask AI today, right? Like Chat GPT, everybody's been talking about it, or Bard Google. Hopefully Malaysia will have one, Ahmad, google.com, as an AI. So 40 years ago, we have this founder, Jim, a late founder, Jim, who started the business 47 years ago, because he is an avid investor, right? But he's just that he cannot make any investment decisions because he don't have information, right? Only professionals have, lah, because they can subscribe information services like Bloomberg, lah, Reuters, lah, which is going to cost them about 10,000-20,000 ringgit a month, right? And how retail investors can, like us, can get information, right? So what he did at that point of time in 1976 was to, every month he would go to Bursa Malaysia and collect financial statements every month, because every company have different financial months, right, or years, lah, and different dates. So he go and collect it, and then he compile all this data, right? So over the past 47 years, this is the data that we have, lah, right? Same thing with Singapore as well. But of course, we started with our Singapore data later, is because once we have online, then we can get those financial statements online easy, lah. We can't go down to travel to Singapore every time and get the data, right? Financial statement. So we started with that first because we want to fill this gap, right? The information gap. Retail investors, people like you and I, who invest our own money, we have very little knowledge, right? Last time, 40 years ago, I'm not sure whether you guys have started investing 40 years ago, but I personally started in 1997. Even at that point of time, I still remember there's no online broking, right? 1996, 97. Online broking only come year 2000 onwards, lah. But at that point of time, the only person you can call to buy shares is Remizius, right? And during the Asian financial crisis, I'm not sure whether you have invested in that period, but I did. In order to sell, want to call Remizer also like kena lottery like that, right? Cannot sell because the prices are going so fast, right? And you want to sell, cannot sell. Call, cannot sell, cannot get in, cannot get the Remizer. So we do have this information gap, and therefore we started to build that data, lah, right? So data can be complicated because when you look at financial statements in companies, It's a little bit, I don't know, you look at numbers also, I get scared, right? Because my background when I started investing was in technical analysis. Just look at price charts, right? I only started to look at fundamental analysis about 10 years ago, lah, because I want to invest a little bit more longer term. Tired of trading short term already, lah, right? The only trading that I do right now is on cryptocurrencies, right? But we use that data and try to make it easy to massage it and make it easier for people to understand. So we come up with certain tools. And just recently, we have also, in collaboration with the SGX, we have come out with the SGX portal as well for you to get information, which is the highlight for today. I want to share with you guys because it's available for free to the public. All right. This way you can get information on the Singapore market. So this is how our platform looks like. We have financial data of all listed companies in Bursa Malaysia and SGX. And also we have a portfolio management system. So when we started financial data, right, it's only being used by people who know how to read financial statements. What about for those who do not know? So over time, people ask, that time the late Jim Wong, hey, can you teach me how to read those data? Okay, so that's how we started our education business 20 years ago. All right. So we started to educate, and not only that, we built a community of investors where we also visit listed companies in Bursa Malaysia so that we can understand the business better. So we are basically more like a fund management or research, very much research driven investors lah. All right. So we really go down to the ground. Like, you know, maybe people like you and I, retail investors, we don't see it, right? But most of the research analysts, they always go down to the ground, right? Go to analyst briefing lah, go to AGMs lah, you know, get invited to and do a company site visit and all that. But we want to do that personally as well. All right. So, and we share it to our investment community lah. So over the years education, right? Then our students ask us another level, right? Because we have been doing this for 20 years. They said, "Ayo, after learning so much already, right? Can you just do it for us, right?" Then we say, "Of course we cannot do it lah, because we got no license to do and take your money and manage for you, right?" So 10 years ago, we decided, I think this could be another viable business for us to do, where we walk our talk. Yes, we teach people how to invest. We educate people how to invest. But now can we do it ourselves, right? So we were quite confident because we have been around for more than 40 years. We already have a system. We already have a principle. We even have our portfolio management system, right? So we decided to embark on a journey to go into fund management, all right? So people who already have knowledge and skills, but sometimes, you know, market is full of emotions, right? And yeah, you know the knowledge, but when you want to apply it, it's difficult because we are too emotional. Like for example, the market comes down now. It's been a bearish trend for the Malaysian market at least, for the past 2 years, right? After the pandemic peak lah, then after that it's been going down, right? 2 years, we are all still waiting for the market to rebound, isn't it? And it's gonna be, it's basically quite emotionally not easy lah, right? Not easy. And also we got no time to do research and all that. So that's why our students ask us, can you do it for us? So one of them, so 10 years ago, we already have this plan of getting, we have a very big dream lah, getting a fund management license, because it's not easy to get a fund management license. Okay, and SC at that point of time has not given any license for the past 10 years. And we're thinking, never mind, just give it a shot lah, right? Because we already have a system. So what part of it? So we look at this, the offerings that we have, the services that we have. We started with our financial investment information, right? The data. Okay, this is basically for those who want to do it themselves. I already have the knowledge. I just need the data. I just subscribe to the data. I just need it, and then I can make decisions myself, right? And then we have the education one. This is where we do it with you. So we build communities around our students so that we'll do the investments with them. We cannot guide them. We cannot do it for them, but we can basically educate and give information, right? Then this is the last piece that we wanted to do, that will complete our ecosystem, right? Can we do it for you or not? Okay, so in one of the things that we have to do in order for us to get a license is to first to be seen, right? Because if you were a Sdn Bhd company, if you're going to apply a license in SC, I think they will just probably put the form somewhere, right? So one of the things they want to get attention first is to go listing. So we were actually listed in the LEAP market. all right? Because we are not big enough to go to A slide at that point of time. Okay, so we went to the lead market first just to get, just to do a KYC in the financial industry that we are now actually a public listed company, right? So our books are all open now. So in March 2019, that's when we got listed. And then in that process, at the moment we got listed, we 3 years ago or nearly 4 years ago, we embarked on a journey to apply for the license, right? So we got listed first, and then we apply for the license. And then only after 3.5 years, right, of, you know, engaging with SC, answering questions and all that, because they want to make sure, hey, who are you guys? You're not an investment bank, you're not a bank, right? But you want to do fund management. So that's why it takes a very long process. And that's quite normal for application, right? So after 3.5 years, after a long struggle, and during the COVID period somehow, then on October 2022, SC came back with us and said, you know what, we'll grant you a conditional approval, right? Within 6 months, whether you can actually get all this conditional done or not, right? And on March 30, just about slightly more than a month ago, we actually get an operational license. So now we are also a CMSL holder. We hope to be as big as Phillip Capital one day as well, right? But that's what we have been, that's what we got now. So now we are basically in operation. We have not started the fund yet, but in the next 2 or 3 months, you'll probably see our funds up there, right? So now we have this whole ecosystem, right? And we can provide service to all level of investors. Okay, we are not a broking house like Phillip Capital, but we are basically information service providers in the industry. Okay, so the service that we provide is basically financial data, investment education for those who want to do it yourself, or we can also do it for you in fund management. Right? So right now our fund management is basically a private mandates, right? It's not a fund, it's not a pool fund like unit trust, because we do not want to go in unit trust, but we do a private mandate, and a minimum investment is only 50,000. Okay, so now we can help investors at all levels grow their wealth. So that's what Equity Striker is, who we are. All right. So I'm the chief market strategist for Equity Striker. Now, one of the reasons I think like Mr. Arif here in front here knows, even Lisa knows me for a very long time, right? We always go to workshops and seminars. I started with technical analysis, started with a charting company, and then I went to stockbroking. After that, I stopped for quite some time lah. Then I think like quite boring, like not working. So I decided to find a platform, because one of my passion, or one of my bucket list lah, right, is to be a fund manager. Right. So when so Alvin Wong and Andrew is basically the second generation after Jim Wong, right? Jim Wong is the founder who's already passed away about 5 years ago. They also wanted to go into fund management, right? So I said, okay, let's do a partnership. Let's just join you guys, and we try to get a fund management license. So that's how I got into Equity Striker about 6 years ago. Okay. So that's a bit about me lah. So for SGX, we have been also collaborating with SGX over the past 2 years to provide education. If you go to our website, if you go to our Facebook or social media, you'll see that there are contents on the SGX market, right? So we are providing information for the SGX market, because this is one of the markets that we'll be looking at as well. And personally, I do some investments on the Singapore markets. Yeah, I'll share with you why lah. Right? Like for those who have not invested in the Singapore market, then these are some things that you can consider. Remember, this is not investment advice, right? So the decision is yours lah. Yeah, whatever information you use here, you please do your own due diligence. All right. So let me give you a big overview of the Singapore economy first lah, right? Because we are Malaysians, we probably don't understand the Singapore market, right? We probably don't even understand our Malaysian economy. Anyone knows really exactly what we really do in our economy? Okay. So even if Malaysia also we don't understand, right? Then, like for example, there's always this question about what do you think is the biggest exports in industry, Malaysian industry, biggest exports in Malaysia to other countries? It's a simple question. I just palm oil. Sorry. Semiconductor. Okay. Most of the time, the reaction I get is palm oil, right? And the other one is oil and gas, but it's actually semiconductor. So the gentleman at the back is right. Okay, so that's why we sometimes don't even know our own industry, right? So if you look at Singapore, right? Singapore, you can see that Singapore is very, very has very high exposure in the foreign market. Okay, Malaysia is, yes, I mean there's exports and all that. We are also exposed to the foreign markets, okay, but we are also quite domestically driven as well, right? There's also quite a lot of imports in Malaysia. But if you look at this, almost like you look at this outward oriented, right? It probably takes about 75% of the Singapore economy, right? Yeah, finance. They are, because remember Singapore got nothing, right? Yeah, at least Malaysia, we still got palm oil lah, we got oil, right? So Singapore is also basically a lot of them are service oriented, right? Service oriented. So like finance is now quite big in Singapore lah, right? I think Singapore will probably, we always think about Hong Kong being the Asian financial hub, right? But now Hong Kong is in a turmoil, right? People are leaving Hong Kong today, right? So probably the next most strategic location, right, would be Singapore, okay, or Indonesia. Actually, Indonesia has grown very strong also. But problem is between Singapore and Indonesia, which one do you think be better? Malaysia don't need to sing lah. No, you never thought about also lah, right? Okay. But of course Singapore will be better, right? Because they have been more stable politically, right? They are more developed compared to Indonesia, right? So they are almost similar like Hong Kong today. You agree? If you go to Singapore today, I mean, number one, I think I also don't want to go to Singapore right now, looking at our currency, right? Okay, better go Indonesia. But they have been growing tremendously as a services country, right? So it's only natural that they will be the next Asian financial hub, right? And you can see all the big banks, all the big money, right? Expatriates going to Singapore and live there. Okay, but these are all the rich one, not our expatriates here, yeah. Okay, but a lot of big money is going to Singapore. Okay, they are also known like this Asian Swiss banking system, right? Okay. So they are quite very well known for their finance industry, right? Because their banks and all that is also much bigger than the ones in Malaysia lah. The information and communication, of course, they are also very forefront of technology, right? They also really have a lot of effort lah in building the technology part lah. Because remember, they are a services industry, right? They got nothing, but they can only build things. Accommodation very small. Accommodation is, you go to Singapore now, it's very expensive to stay there, right? But people still go to Singapore. Wholesale trade is basically all the barang-barang lah, right? Transportation is also very big because Singapore is also another strategic hub for logistics, right? Manufacturing also is there, mostly semiconductors and all that lah. Okay. Then the others are all domestic driven. Real estate is quite small. Others are quite small lah. Construction also very small because what can you build somewhere in Singapore? Okay. But the rest of them are more service oriented. Okay, so for Singapore, right, their performance of the market or the economy very much reliant on external factors. Okay, especially US and all that. I'll show you where they actually do their trade with later on. But they are very exposed to world or global markets. Okay, as we all know that Malaysia has been in a downtrend for the past 2 years, right? In fact, our peak in the KLCI was in 2014. That was 9 years ago. Right, 2018 it tried to break the previous high in 2014, cannot. Okay? And then it came down in 2018. Whereas all the other global markets are going up. So we have decoupled since 2018. Okay? Our market is the only market that actually went down. Of course, some other markets as well. Okay? But our market has actually come down for the past 2 years. This is based on the index only. Okay? But the rest of markets are still up there. If you look at Singapore market has also been up for the past 2 years because they follow the global markets. Okay, Malaysia is still very silo lah. We are still very domestically driven. All right. So this is the trade partners. You can see that China remains the biggest trade partner. Actually, Malaysia is very big as well. All right. So the top three is China, Malaysia, and US lah. Right. You can see that their total exports is 710 billion. Total imports is actually 655. So they actually have a surplus, straight surplus, right? Malaysia normally have deficits lah. We import more than we actually export. Then Taiwan, EU, and Hong Kong. So they are quite diversified because Malaysia is being the neighbor, right? We always sell cheap products to Singapore, and then they turn it around and sell it cheaper to Malaysians. Okay, like water lah, for example. So we can see these are the biggest trading partners. And of course, China, which is now USA used to be the biggest, right? Malaysia is the biggest, but now China is quite main trading partner for the Singapore market right now. All right. Okay, so I already mentioned to you this one. So if we look at GDP, Malaysia, actually for 2022, we posted quite a good GDP growth, but we have to remember that GDP is year on year, right? If you look at the growth based on a very low base, because Malaysia started at a low base, any increase is high lah, right? If your base is already high, then any increase can be very small, but they're still increasing, right? But there is a contraction in the past 1 year for the Singapore and US market. It actually came down. Malaysian one went up, but it's a bit weird, isn't it? Right? For the last year, Malaysia GDP went up, but our stock market did not go up, right? But Singapore and US down, their stock market go up. The balik one, nah? Why? Okay, why? Because in the past 3 years, we have never seen so many prime minister change before. Okay. So we have this political instability in our country, right? And even today also, we do not know whether the current government is strong enough, because this is a unity government, you know. Okay, and is Malaysia united or not? I do not know. I'm not a political analyst, right? So anything can happen, right? Anything can happen. Another Sheraton move can happen. I don't know, right? That's why that's a problem, right? Because later I'll show you the data despite what being said, right? Now just simply guess, around the ASEAN region, including Indonesia, Philippines, or whatever, right? Maybe I can even say even the Asia region. Which markets perform the best? Which country? Because I just presenting Singapore, I have to say Singapore the best lah. No lah. No. Indonesia. Right? I'll show you the stats in a short while. Okay. So, but you have to remember that economic data is very much lagging lah. Okay. Which means that if the market were up in 2022, probably we're gonna expect the GDP to be up in 2023. Okay, because market is very leading one, right? All this data only come like once a year or every quarter. Yeah, but stock market has been trading every single day, so people make decisions much faster. All right. So it has slowed down a bit, but the question is, are we going to have continued slowdown? Because if we look at the news today, right, especially the beginning of this year or last year, the World Bank, IMF, and all that said that the global economies are going into recession this year and next year, right? That's what the articles that you read lah. Okay, so we do see some decline in 2022, but it's still not negative yet. There's still some growth. Okay, so the question is, will there be a negative growth next year or not lah? That's the question, right? Okay, but looking at the markets, you probably see some growth because US markets has come down. Okay, Singapore market has come down a little bit also, but not so much lah. So you would not expect a disaster in the economies. Okay, so we always use the stock market as a leading barometer or indicator against global economies, right? Because it's much faster. So these are some of the GDP stats. Still positive, right? For 2022. So 2023, they expect it to be probably about the same. Not much growth lah. There is some growth, but not much growth. Okay, so we're probably going to see a little bit more growth in the global market. Malaysia market, we do not know yet lah. And Bank Negara has also come out recently a statement that says that we're going to expect this growth to continue, but a much moderate level. Of course, they cannot give you a forecast one. I cannot tell you for certain, right? But so 2023, 2024 is going to probably still be a challenging year. Okay, so we already tahan for 2 years. We probably have to tahan for another year lah. All right. So if you look at some of the activities in the world, this is shipping, right? And Singapore is very big in logistics and shipping. Okay, so ever since the pandemic, shipping activities have started to increase a little bit, but it's still very low compared to the previous ones lah. So that's why you see a lot of shipping company share price in Singapore has come down a lot. Right? Whether it's logistics, whether it's services, they have come down a lot because we haven't seen really strong activities yet. Okay, there's still supply chain issues today. Yeah. The electronic sector in the month of May is actually quite bad lah. Right, so you have all the big tech or semiconductor companies like TSMC, Quanta, Compal, Wistron, and all that. They're all down, right? In May, so that's why you see the US market has also tumbled, right? So activities in the electronic sector has also come down lah, and you can see overall for this year it's not looking that good. January was a jump lah, only one this for this company called Hon Hai, but the rest of them is, I mean, you look at the whole thing is red, doesn't it? Very little green only. Okay, so it's not really that good lah, and the electronic sector, and that's the reason why you see Malaysian semiconductor companies are also not doing well. Okay, we see a rebound in the past 2 months, but I do not know whether the rebound is real or not lah. Right, so be careful because statistics shows that it's not improved yet. All right. So this is Singapore's GDP from 2021. This quarter, you can see that the trend of their GDP growth is actually getting lower. This is Singapore, right? So that one also doesn't look that good lah. Okay. In fact, not just Singapore lah. This kind of graph is not just Singapore. This is the whole world also like that. All right. Activities have been really gone down over the past 1 year. After pandemic, actually a lot of activity because everybody like, wow, after 2 years spending at home already, I need to do something, right? So there were this we call revenge buying lah, revenge consumption. Okay, so it only lasted for like 3 to 6 months, and then it all goes quiet again. Right? So you can see today also lah, outside activities, there are a lot of activities even on the consumer side, right? But consumer side okay lah, not so bad lah, because you go shopping mall still full, right? But whether buy things or not, we do not know lah. Okay, maybe just go there for free aircon because it's been so hot lately, right? So this is how it looks like, and this is basic commodity prices. Commodity prices have had a runoff, right? A very strong bullish trend during the pandemic period because supply was very limited. Okay, so that 2 years we have seen very strong commodities prices, including agricultural products like palm oil. Okay, crude oil prices has gone up as well, but that rally only lasted for about 1 year plus only. Okay, and you can see that the prices are starting to taper off right now. Okay, so if you look at the whole market, like commodities prices, activities in the shipping industry, you look at GDP growth, they are still going down, right? But we have to remember that again, all this data, are they leading or lagging? Quite lagging, right? It's better to just look at the market performance, because if the market do start to rebound in the next 6 months, that means you know that the economy is getting better already. All right. So these are some sectors that's likely going to do well for the Singapore market, because we know that foreign trade is going to be continue to be weakened because there's still a lot of uncertainty, right? And the shipping, the activities have not really increased yet, right? Supply chain issues are still there, right? So if you look at domestically, this could be some of the sectors that we want to look at. In fact, consumer sector has always been the most defensive ones, right? Like Malaysia as well, right? Consumer sector, the consumer industry has always been the defensive. So in times of market uncertainty, normally our investment portfolio, we will have more of these consumer stocks, right? Because no matter what, whether it's recession or whether there's growth, people still have to consume lah, right? So they have always been seen as defensive, and they also pay dividends, right? So it's very defensive. So it won't go wrong one if you have, in times of crisis, you just have more consumer stocks in your investment portfolio. When the market grow again, you sell some of the consumer stocks, and then you put more of these growth stocks again. Right. Yeah. The consumer products where it's like you look like Nestle, like Dutch Lady and all that, right? Boring stocks, but safe lah, right? So when it comes to investing, right? Because I believe also that most of the time you have to be fully invested, right? Because if you have like 50% invested and 50% cash, then what's the point of investing, right? But what's the point of holding a lot of cash? So what we do normally, even in equities tracker, is we balance our portfolio, right? So in times of uncertainty, we have more consumer stocks, right, and very little all those a little bit more riskier ones, right? But when the time gets better again, we'll sell all the consumer stocks and buy more like technology stocks lah, right, or plantation or whatever. Okay, this is how we manage. Personally, that's how I manage my investment portfolio as well, right? Very little cash lah, because keeping cash doesn't help, right? Even if I got cash, I put into money markets, right? FDs lah, fixed deposits, right? All those zero risk investments. Okay, if you want to talk about zero risk investment, this is just out of this topic today lah, right? Normally people will use FD as a zero risk investment, right? Because you put in the money, there's no risk one. You get 2-3% a year, right? But there's another zero risk investment that I think a lot of people never thought about. Anyone? Oh, Forex got big risk. Yeah, Forex, the price can fluctuate, ma. Right? Anything that have price fluctuation one, got risk. I'm talking about zero risk. Even risk of price fluctuation. Yes. Yes. Is there price movement in EPF? Don't have. EPF, our provident fund. Really? Because over the past 5 years, right, or even the past 10 years, the return is between 5 to 6%, you know. Yeah, there's voluntary contribution. And they have just changed recently from 60,000 a year to 100,000 a year. And for those who are already retirement age 55, you can put in and take out easily, like FD. But of course, people who are younger before 55, you put there, you cannot take out lah, right? But those who already retired, you can treat it like an FD. And no lock-in period one. And you get 5-6% a year, right? But it's not calculated on a daily rest or monthly basis. You have to wait for 1 year, then you know. So it's a 1 year lock-in lah, until you get the dividends lah. No risk one, right? ASB used to be no risk because ASB is a unit trust, but also the price is standard fixed at $1 one, right? But yeah, 10 years ago, very good lah, returns, right? I mean, 20 years ago, it's like double-digit returns one as ASB. Okay, but now how many percent? No lah, not even 7 4. I'm talking about the ASB or other plans, but this one is the fixed one, $1 one. Only 4%. So might as well put my money in EPF or get 5% or 6% one. Right? That's why now they allow people to, they open up ASB now, everyone can also invest. More allocation for the non-boomies. Because performance very low. Huh? Bank Rakyat. Bank Rakyat is what? The stock itself. Or Bank Rakyat. The company itself. Again, yeah. I'm just talking about low risk one. No risk. Okay, no risk. You buy ETFs, you buy unit trust, also got risk because there is unit prices. There's NAV, right? But this is no risk one. So our benchmark is always that EPF, right? So if my investment cannot make 8% and above, no point for me investing. You agree? Carry trade, how is it risk free? Because it's still based on the fluctuations between two currencies, right? Yeah. But if you can be risk free, if you look at the longer term, but I do not know because again, all this data is all historical, right? Whether it's going to repeat itself, we do not know also. Like all this data here, historical, right? But when it comes to investment, I'm talking about where can I put my money, right? With no risk one, right? So as an investor, so I just is to make you guys think a little bit lah, because when we do our fund management license, we do a lot of study in the industry, right? If I cannot make even let's say 8% from investing, I don't want to waste my time doing myself. Put my money in EPF lah. Don't do anything, you get 6%. This one you die, do, trade, invest, go to other market, do this, do that, 3%. Or even negative, right? Okay. So that's the benchmark, right? So for us, that's our benchmark. Okay. If our fund cannot perform more than 7%, I think we don't need to be in the business anymore. All right. Okay. So when it comes, why Singapore, right? So I'm going to again show you a few things about Singapore. The other one that's quite big in Singapore is the tourism and hospitality sector. All right. The prices are more expensive there. If you go to spend a hotel right now, right? Hospitality is also quite big in Singapore. Okay. Although Malaysia is cheaper. I mean, if I'm a foreign guy, right? There's this thing called hospital tourism, right? Because for the Europeans, in order for them to go and get, let's say, medical treatment, it's cheaper to become to Asian countries than to do it in Europe. Then after that, whatever money that they actually spend in Europe, I can actually just go to get the same treatment in Asia plus holiday. So that's the concept of medical tourism, right? So Malaysia also has, right? Thailand also have, Singapore also have. So between the three, probably Thailand will be the cheapest, right? But if I'm a foreigner from Europe, Thailand, the doctor's okay, I supposed to do my right hand, suddenly they give me left hand, Right? Then Malaysia, so right? Singapore got standard one, right? Okay, so they probably do better. They pay more, but they get a peace of mind, right? In fact, a lot of Malaysians also I know because my time right now, I have all my uncles, aunties all quite old already, right? When you really seek the best treatment, they always Singapore. Okay, why Malaysia don't have doctors, right? So that's why you see their tourism, their medical, their hospitality industry is very strong there in Singapore, right? So this is one thing, and especially, right, because China has not really fully opened up yet. Okay, now if you still remember before pandemic, right, Chinese tourists even in Malaysia is crazy, right? You have vast loads of tourists from China, right? Now, yes, now it's very little, right? So tourism depends a lot on the Chinese tourists for now, lah. Okay, European tourists, they prefer to go like Thailand, Vietnam, and all that, right? Because they're living in a developed country. I want to go back to the cowboy times. Better go there. Singapore too developed already. If I'm Europe or want to go to Singapore, it's like another Europe, right? Malaysia, I come, I scared. Okay, drink alcohol also scared. Okay, Thailand is the best, cheap, good. You want to drink alcohol, and now got drugs some more. Everything they have, right? Okay, so when China really opens up, right, in the tourism, I think not only Malaysia benefit, but Singapore will benefit the most. All right, because they have really good agreements between, and Singapore, travel between Singapore and China is relatively quite easy, as compared to Malaysia. Okay. So that's how the scene is looking like in Singapore. It's a bit vibrant, but of course in Singapore also the people in Singapore are quite depressed right now, right? I'm talking about pure Singaporeans, right? Why is because Singapore is very good at attracting big money. And all the rich people from Europe, from US, from other countries, they have this. Their second home campaign is much better than Malaysia, right? Because Malaysia one, you attract any Tom, Dick, and Harry, but Singapore one, they really attract the ultra rich. All right. So the money goes there, and then of course for Singaporean, we'll feel like, oh, now I feel like a foreigner in my own country, right? Yeah. Because you get all the rich fella coming, and now I'm just living in a HDB flat, which I can only own for 99 years, right? That's it. At least Malaysians working in Singapore is happy. Why? Because at least I can get money there and buy property in Malaysia. But Singapore, where are you going to buy property? Cannot buy also, unless they marry a Malaysian woman. Okay, maybe I'll start to do a business matchmaking Malaysian woman and Singapore men. Singapore men are not getting married also. Stressful, right? So it's very stressful in Singapore because I do have Singaporean friends. Okay, and all of them are thinking of getting out of Singapore, maybe to Malaysia, because that's now become rich man's land already. Okay. So that being said, so if you look at the performance of the Singapore market, and for every market, it look about the same lah. So later I'll show you some of the figures, right? So this is the growth of the Singapore market. That was since 1993, okay, until today. This is a monthly chart, right? And this is the linear regression line. A linear regression line is basically a straight line method to calculate average movement lah. Okay, it's a straight line method because market is not straight line, right? It goes up, it goes down, it goes up, it goes down. So the middle line is the average. Okay, and then we have the bottom line, we have the top line, right? The bottom line is the floor, the top line is like the ceiling lah. That's a 2 standard deviation from the linear regression line. Okay, so I know it's getting a bit too technical, but whenever we have a crisis, right, you'll see that most of the market index goes down to the minus 2 standard deviation at the bottom lah, at the floor. So like Asian financial crisis, right? There was also this 2021 recession in Singapore because there was a dot-com bubble before this. Okay, and then there's this subprime mortgage crisis, US financial crisis. Okay, and then of course we have that crisis there in 2020. So all of them, all the time, most of the time we have a major crisis, it goes to the floor lah. Now, if you put the same chart on a KLCI, it's also the same, right? Even the KLCI is the same, or whatever index lah. Okay, you put it, you'll see that major financial crisis, it hits the floor. Now, interestingly, Singapore market is currently here near the average. Okay, it hasn't really be very strong bullish yet lah. So this is a very crucial area, right? It's either going to break out and go higher, or it's going to, oops. Did I press something wrong? Or? Yeah. Thanks, Brian. So if you look at the Singapore market, it has actually rebounded from the low. Okay, Malaysia has also rebounded a little bit, but now Malaysia is back down here again. KLCI is down at the bottom again. So if you ask me, probably there will be more opportunities in Malaysian market than in Singapore at the moment. Simply reason is because Singapore has rebounded and it still stay up there. Malaysia rebounded and it came down back again. You know, it does not have enough Viagra to push it up higher lah. Okay, so but Singapore is still there. This is a shorter term chart, and you can see that over the past 12 years, okay, Singapore has always been trading in the range. Now, if you look at this chart later, I'll show you the USD against the Singapore dollar. It looks exactly the same. All right, so it's very much dependent on the US dollar. So it has been trading between 2004 and 2004. So if you are looking for a very stable, less volatile market, you look at Singapore. Right? Because Singapore market, if you look at all the share price, it's not as exciting as Malaysian shares. Okay? Malaysian shares, people like to goreng on, right? Why? Because there are a lot of retail investors. Now, Singapore market retail participation is low. More institutions. Retail. People like you and I, we have retail, we have professional, right? Institutions. Singapore very less retail. People will just take my money, put in fund management, buy ETF or whatever, then just let them manage for us. They got no time to do it. It's less than 20%. It's a lower part. It's like maybe, I don't know, the last statistics we get is about 22, 21. Okay, Malaysia is a little bit higher lah. Okay, Malaysia is below 30, but probably about 26, 27%. All right. But they are very inactive, Singaporean. They are not trading most of the time. Right? They are basically buy and hold long term. Okay. Chasing the corporate ladder is more important. But for investments, they just leave it to the professionals to do it. Okay. So it's less volatile, right? Now, how do you know? Because I'll have data to show you guys later. So if you want to go in the market, there is not much excitement, relax a little bit, then Singapore. Okay, because the price fluctuation is not much. So now we are looking at this part right now. In technical analysis, we call this a gramophone pattern. Right? It's a sideways correction with uncertainty, but the volatility is getting bigger. Because when we get bigger volatility, it simply means that there's more uncertainty. Right? So the STI is currently here right now. There are two possible scenarios lah. Okay, this is like a technical analysis textbook example. All right, what could possibly happen? Malaysia one is no problem. Malaysia is down here. Okay, it's a good thing here because there's only up room to move lah, right? Singapore one is like hanging in between, you know. Okay, Singapore is like hanging in between. So it either can rebound and go up higher because it's now here, right? It either can break the previous high and then pull back and go higher. So uptrend forming, right? So the question is, can there be an uptrend in a market like this? Okay. The other one, so one scenario is this, right? And we can see that this is this support here at 2,900 points. This is the STI. And you can see STI is here. Okay. Our KLCI is down here. Okay. STI is here. So not so bad lah. And it's been trading in the range only one. But the only problem right now is because it's quite near the top lah. Right? Over the past 10 years it's here, right? It's quite near the top already. Okay. But again, if the market is really going to start, economy start to grow again, this one can just go explode lah. All right, because it has been going sideways like this for already past 11 years, 10 years. And then when really the market starts to grow, it can really grow very fast one. Same is true also for the Malaysian market. Okay. Maybe not so much for the US market because US market is like don't know where in. Singapore market is already at the moon already. Right? So here, the major support to look at for the Singapore market is at 2,900 points. Because if it can stay above this level, that means the market is still being very supported very strongly, right? And then there's a high chance that it can go up higher. That's one scenario lah, right? But of course, if let's say the data has not improved, then the price may break below the support, and then the STI can come down here. And if it comes down to 2,400 points, remember it's the range, right? Okay, this is the time to actually just close eyes and buy lah. All right. But we are here 3,002. So from 3,002 to 2,004 is actually quite a big movement. Okay. So it depends on whether it can stay above the 2,009. So that's again just a technical perspective. Right. Now, one of the things, because US, Singapore is very much dependent, especially in the US market, we also have to look at the cue from the big brother, right? Because everybody is looking at the big brother lah, right? And this inflation that we see right now, when did it start? What do you guys think? Okay, this one showed until 2022 only lah. But when do you think inflation really start to increase? Okay, Malaysia we got no rasa one, right? Because Malaysia inflation rate is still quite low, at least officially lah, right? Officially, we are only looking at 3.2% only. But do you feel it? Right? Now, Bank Negara is also not stupid lah, right? Now, if you go to Bank Negara's website, they have actually come up with another indicator for inflation. Do you guys know about it? I think they did a paper in 2021 or 2020, if I'm not mistaken, right? They have this index called PEPI. It's a perception index of EPI. EPI is basically a perception index of a most consumed products. Now, CPI is always look at the producer price, and remember that Malaysia, a lot of goods and services are subsidized. All right, so the subsidized price is where you calculate the CPI mostly. Okay, but when it comes to the end, the retailers, the markup is crazy lah, right? So you all know what I mean. The cost of, let's say, whatever it is for restaurants, maybe the cost go up 2-3%, right? But they go and mark up, will increase 20-30%. So they said the perception in the market is different from the real official figures, right? So you go to Bank Negara, you can find those reports. And the Bank Negara PEPI report at 2020 was 7.9%. Not inflation, that's not official. This is another index that created by Bank Negara, right? That's the perceived index, perceived inflation. Yeah. For me, that's the more real one. Okay. You cannot say that's inflation, because people will come and bang you after, Malaysia inflation 3.2 only, not much. Okay. Okay. But this inflation has been developed for a very long time already. Okay, ever since the subprime mortgage crisis. in 2008, 2009. Because you still remember after 2009, there's this quantitative easing. Okay, I'm not sure whether I have the chart to show you the US, how much money they've printed in the US. Okay, the amount of money they printed in the US for the past 10 years is equivalent to all the money that's been printed historically. So a lot of money, but somehow they are able to suppress the inflation rate until COVID came, right? And boom, 9%. Right? Previously it was 2%, 3%, quite okay one, right? 4%, and then suddenly after COVID, only 9.1%. Then people really suffered, right? So when you look at this, right? So of course, then the US have to take action, definitely, right? How do you the proven way to fight inflation is what? No, print money will cost more inflation, So first of all, they have to stop printing money. That's one, right? Because there's so much supply, your money get diluted. That's why inflation goes up, Inflation, rising of price is just a symptom, right? Because the money is being diluted a lot, then you get inflation. Everything gets more expensive, Supply is very little, demand is a lot. Yeah, it's actually been there already, It's just that that COVID-19 just accelerate things, right? Now all this uncertainty, right? Ukraine war has actually the one that's disrupted the supply chain the most. Okay, because now we have sanctions, not just now Russia. Of course, Russia is now, the US is trying to de-alienate them, right? To alienate them, that means put some embargoes and all that, right? So that creates a problem. But now it's a different thing, because of course Russia and China are still good friends. Okay, so I think the next big superpower will probably move from the West to the Asian market, Okay, and Malaysia being that Asia zone can benefit from it. So Malaysia, I think, should make more friends with China rather than the US. Okay. But this caused the rise of interest rates, right? Because that's the natural way of fighting inflation, and that's the problem that we see today, right? Because interest rate has negative correlation with the stock market. In fact, a negative correlation with any investments, because cost of debt is getting higher. Cost of getting fund is higher, right? So if the cost of getting funds are higher, I also do not want to invest further, So expensive to invest now, right? But when interest rate is zero, fine, awesome. Okay, just borrow money, expand. Okay, but the problem of the interest rate increase, has been too sharp. Never seen before, right? So I'll show you some of the figures, This is basically the federal fund rate, right? In just 1 year, it moved from 0% to 5%. That's quite a lot, That's why you see that there are some bank runs somewhere in the US, right? People scared already whether this bank can tahan or not. Okay, but it just increased too fast, like every day 0.5 basis, 0.5. But recently it started to taper off a little bit, Okay, so now it's 5%. Malaysia OPR. Okay, this is the first time in 13 years that the US rate is higher than the Malaysian interest rate. Okay, I'm not sure whether I have the data to show you or not, but I think this is only US, Okay, because Malaysia interest rate now is about 3.7% or something. 3.2 or 3.7, 3.5. 3.25. It's not grown that much, we're here, So they have overtaken us, Okay, this year itself or late last year, after 15 years being. Now, actually this one is also very dangerous for the Malaysian market. Why? Again, you talk about carry trade just now, right? Okay. The sad thing is, although for the past 12 over years, the federal rate is almost zero, and of course Japan is also zero. Most of the other European nations is also zero, right? Okay. And ours is about 2-3%, right? Now, if I just borrow money from US at 0% and just park my money in Malaysia, I still get 3% net. Nice, isn't it? Okay. So that past 15 years, but we don't see that money coming in here in a big way. We see money going to Indonesia. Go see money going to Vietnam. You see money going to Thailand. You see money going to Singapore. Malaysia never even consider. Okay. Malaysia only clever to play politics only. Okay. I don't know, somehow they just, Malaysia is not on the map, you know. Okay. Maybe whatever balance I have left, okay lah, put there lah. Okay. So we don't really see a lot of foreign inflow. We do see foreign inflow during those periods, but as compared to other countries, they have received much more. Right? Because of course, you look at Vietnam, interest rate is much higher lah. If I borrow zero money, invest in business in Vietnam, I get easy returns, right? But now the things have changed, right? Because US also increased a lot. Now we have probably some country like Malaysia take out money from here, go out, right? In the US lah, you get 5% one. My interest rate here is 3%. Okay, and that's the reason why you also see that our currency is a shit right now lah, right? Even against the Singapore dollar, we are at a historical low. Okay. Okay, so what do you guys remember? What is US Federal Reserve target for inflation? 2%. They are very clear that they want to bring it down to 2%. Because the moment they can bring it up 2%, then they can start to revive the economy again. Yeah, by maybe lowering the interest rate back again. Okay. So right now they have actually done quite okay, quite well. But remember that you cannot aggressively raise interest rate one, you know, because it will create a shock in the system, right? Why not? They just, tomorrow just increase 2% lah, kau team. Or you put 2% next year, I think the whole economy will start to collapse. Everybody panic, right? But they have been gradually doing this from 91% is now at about 4%. That's the latest one that we see lah. And that's the reason why they did not raise the interest rate, right? The last quarter, just remain at 5%. Okay, but if you read the reports today, they said they're still going to increase it a little bit more. Why? Because inflation has not gone down to gone down to 2 yet. Okay, so their target, right? This is again all from Federal Reserve, US. Their target is 2%, right? Hopefully by December, the projection there in 2023 is 3.5. Then next year 2.5. So it's gradual, right? But the current movement on the inflation rate is actually faster than they have expected, lah. Right? That's the reason why they did not raise interest rates the last quarter. Okay, so once they have achieved that 2%, right, then you see that in the longer run, their interest rate they want to maintain around 2.5%. They will not, I think they will not go to zero anymore because it doesn't make sense unless they have to bail out companies again, lah, and do quantitative easing again. But there's no reason to do quantitative easing for now, right? So all they can do is maybe just put their interest rate low to 2.5%, and then economy can start to grow again. People will start to take more and do more investments. That's what they wanted to do. Right? Because increasing interest rates will not encourage investments. Okay, and by the time comes when they really stop increasing interest rate, and when they start to lower interest rates, that's when we see global markets will start to move again. So like I said, maybe in the next 1 or 2 years, it could last until next year probably. We're still going to see a very subdued market, right? Because businesses are not going to take more risks to expand. Okay, but there are certain sectors, so that's a global thing, right? But there are certain sectors that we can look at. Right now, the second part I'm going to go through with you guys is some of the reasons to invest in Singapore, some stats. This is for in a Malaysian perspective, all right? I guess you guys will know. Now, this is the performance of the market over the long run, right? Remember I told you about Indonesia? This is annual growth rate compounded, right? Over the past 30 years, okay? Even if you look at the past 10 years, it's about the same. Lebih kurang lah. Okay, 30 years and 30 years about the same. The reason why I look at 30 years, because if let's say you're looking at long term, okay, long term. So Indonesia is the highest. It compounded about 10% a year. That's crazy, right? This is not annual growth, it's compounded growth over the past 30 years. Okay. Malaysia, 2.2%. Okay, performance of the index. Thailand is 1.9%. So at least Singapore is better also. 2.8% as compared to Malaysia 2.2. Now the US market, the best one. Okay, this is Dow Jones, but if you at Nasdaq is crazy lah. Okay, but Dow Jones generally is about 7.8%. Now the other best performing market, actually surprisingly, right, is India. Okay, 11.8% in the long term. So the rest of the European markets, more established market, about 3%, 3%, 4%, right? Dow Jones, 7.8%, US market. Indonesia, surprisingly also. So Indonesia and India, right? So if you look at the markets, the one in red is basically the performance is lower than the Singapore market lah. Even Japan, of course, Japan has been in a deep, has not been growing for many years, and I don't think so they can grow back again also lah, right? Because the population are getting older then, right? Shrinking. Probably the next bet I want to take will be Korea lah, right? For me, I think Korea will be the next Japan. Because Korea got better marketing. You agree? Right? And the K-pop has infiltrated the US, you know, right? The Cantonese used to have Canto pop but cannot penetrate, right? Malaysian, no need to say lah. Okay, Malaysia, I don't know what pop lah, but maybe just pop, you know. But Korean pop is huge, right? Curry pop. Okay. Vietnam is still still very not really a developing one yet lah. Because the others are more established. But Vietnam is very high growth, but very high risk also. Right? Cambodia is another one also. Okay. But all those countries, remember, they are communist countries, and then the other one is the junta. Again, political is, you can change anytime one. So that's why the risk is there, but of course opportunities are high also. Right? I'm looking only at established markets. So Malaysia used to be the Asian tiger, right? Now the tiger has lost the stripe already lah. So Singapore will be a more stable one. I said 2.8% is better than the rest of the other counterparts, except for Indonesia lah. Right now, Malaysia, Thailand, Singapore, Indonesia, they are the bigger ones. Philippines also there, but Philippines market cap is lower than the rest of these four. These are the big four lah in ASEAN, right? In ASEAN. So the nearest in Singapore, and you look at the market cap, right? Singapore, I mean, let's say Malaysia used to be Asian tiger, the biggest market cap about 20, 30 years ago, right? We are here at 364 billion US dollars. Thailand has overtaken us. Indonesia, of course, has taken us, and you look at Singapore. So now we are at the bottom already, right? Hopefully we'll not be below Philippines soon. Okay, hopefully, right? Because Philippines right now is about 200 billion. Okay. The others like Vietnam and all that is very small. That's below 100 billion, right? So Malaysia is here. So you look at market cap in Singapore is much bigger. The bigger companies, the banks are bigger than in Singapore than in Malaysia, right? This is the Singapore dollar against the USD against the Singapore dollar. So you can see that, you know, this movement here is almost like the STI chart, right? So I say it looks almost similar. It's very much dependent on the US dollar. Okay, because one of the things in Singapore later I'll share with you guys is there are also a lot of dual listing companies in Singapore. Okay. So Singapore, so this is the range only lah. Singapore is quite steady against the US dollar one. Because if I show you the Malaysian one, how does it look like? Malaysian one is like that. It's been down. Okay, you want to compare, then look at, this is Malaysia against Singapore. This is Singapore dollar against the Malaysian ringgit. That means it goes up, Singapore gets higher. So now it's at a historical high lah. All right. Now, if you just go back in 1997, remember Mahathir pegged our US dollar, our Malaysian ringgit against the US dollar at 3.8 in 1998. Singapore is already 3.45, quite close. That means we are like now Singapore is like US already, you know, compared with 20 years ago. Yeah, it's not cheap. Okay, but for Singaporeans, they're happy lah. Happy coming out to Malaysia and spend, right? Everything is like 3 times more. Okay, so one of the things, of course, the second reason is, you know, if buying Singapore shares lead you to the Singapore dollar exposure line. You look at the growth, right? The CAGR for the past 10 years, the growth is 3.3% in the past 10 years. That means our ringgit has been weakening against the Singapore dollar about 3.3%. Okay. against the US dollar is also about the same. So Singapore dollar has been it's quite strong. I mean, they're quite strong against the US dollar as well. All right. So, and now you're getting more rich people in Singapore. So maybe that's like your money putting there for longer term wealth creation, lah, right? But it's quite astonishing, right? Because if let's say your investments make about in Singapore 5%, you plus the forex gain another 3%, you get 8% already, right? If you're making 10% in Singapore plus that 3%, you make 13%. Okay. Now you see why a lot of investors don't want to come to Malaysia. Does it make sense for Singapore investors to invest in Malaysia or not? Because even though my portfolio go up 10%, you minus that 3%, I only make 7%. You see? Okay, so forex plays a very important role. So if our money keep on declining, we will end up only domestic investors. Okay. So this is a long-term chart. It has never, also, of course, in a short period of time, it will come down. But you look at generally, it has been going up, right? This is since 1991, about 20 over years ago until today. It has never come down. Okay. And now it's here, historical high. Reason number 3 that you can invest in Singapore is the diversification, right? Because there are a lot of, Malaysia has a lot of opportunities as well, right? Because I mean, if you want more excitement, it's better to trade in the Malaysian market, lah, right? But we want to also look at what Singapore can offer that Malaysian don't have. That will make more sense, right? Because there's still a lot of companies that you can invest in Malaysia. Now, there are foreign companies listed in Malaysia. Like for example, you have one of the companies that investing is Thai Beverage. Thai Beverage, you know, all the whatever beverage is very big in Thailand, right? But they cannot list their company in Thailand. Why? Because they have alcohol, right? Thailand don't allow alcohol. Yeah, so they are more halal than Malaysia, right? Malaysia, we still got Carlsberg listed, right? Okay, but Thailand, they really don't allow. There's no alcohol company, so they have to list the nearest. Thailand said, "Hey, list in Malaysia, neighbor what?" Malaysia can list, but again also, right? The nearest is Singapore. Okay, and you can see a lot of companies, the companies dual listing in Singapore because Singapore is being very strategic, right? Company like Thai Beverage and Parador is another liquor company. Well, a lot of liquor company go to Singapore. Okay, this is just recently listed last year. Okay, they are based in Philippines. Okay, they are also listed in Philippines. They are dual listing here in Singapore. All right. NIO also just got listed. NIO is the electric vehicle company, right? Okay, from China. Right. So they listed there. Of course, big conglomerates like Jardine Matheson. There are quite a number of them. You can go to the Singapore website. I just basically make the link shorter because if you go to Singapore website, the link is very long. Okay, so you can just click here and go to see all the companies which are dual listed in Singapore, right? Quite a number of them. I just show you the most famous ones, right? So Thai Beverage is one of the things that I've been investing in. And Parador I got a little bit because they just come in. Okay, so I bet on alcohol. Okay, if they got marijuana here, it'll be best, man. Right? So I'm a very big sinner. This is not ESG. Okay, so again, for diversification purpose, right? And of course, you also have, these are some other pointers, like REITs, for example, right? You look at Malaysian REITs, they're very much domestic real estate properties, right? But Singapore, later I'll show you, because you can get all this data in the platform that I'm about to show you, right? There are a lot of other REITs that are not available in Malaysia. And a lot of these REITs in Singapore, they are foreign properties as well. Yeah, but the problem is, your foreign properties are how I know they are real or not, right? So we'll have the data to show you, okay? And there are other REITs that, for example, data centers, right? Singapore has a few REITs just focused on data centers. And the data centers right now is crazy, right? In fact, in Johor, I just spoken to a friend, it's in a listed company last night when I met them. Johor is also now building a lot of data centers. Okay. In Johor, because I think Singapore knows space already. Okay. And now everything is online, everything is internet right now, everything is data, right? Big data is a big thing. Okay. So they need to have servers, data centers. Okay. So Singapore has reached 4 data centers, which is not available in Malaysia. Right? So we want to look for in Singapore things that are available in Singapore but not available here. Then for me, it makes sense to invest in Singapore, right? Because you want to invest in semiconductor, especially, I better want to do it here, okay? Because here got more excitement, right? Singapore also got semiconductors, yes, but you find out that the PE, right? Price earnings ratio. You find that most of the companies in Singapore PE are very low one. Okay, Malaysian companies, although the same industry, PE can be very high. So we were quite surprised when we look at some of the semiconductors in Singapore last year, when we did the research. Malaysia PE, sometimes semiconductors can go 30 times, 40 times one, right? Okay, Singapore, 9, 10, like industrial PE only. Okay, like I said, why? Because Singapore more kiasu lah, right? Okay, I hope this is not recorded. Recorded lah. After I cannot ban from going to Singapore. Okay. You have Singapore listeners also. Maybe, yeah. Okay, good. Okay, but that's a fact, right? But I'm not saying the kiasu, but because remember Singapore has a lot of institutions, right? And institutions normally try to value them a little bit lower one, right? Like for example, when we get listed in Bursa Malaysia as well, of course we try to do our PE as high as possible so that our valuation get better, right? But they don't understand technology, right? So don't say your PE has to go like 9 or 10, which is like an industrial PE, right? So when you get institutions who are evaluating you, the company, they will not evaluate you very high one. Because they also want to make money, right? So they evaluate you very low. Okay. So Singapore, that's the thing about Singapore is that if you really want a stable investment, not much volatility, not much movement, Singapore is the best lah. Because for me, I put my money there. I don't need to like get worried one, right? Because I'm looking at the long term. Okay, now Singapore, you don't want to trade here, okay? Because later I'll show you some data about trading in Singapore. Now, you also want to look at companies that are involved in very new, innovative industries. The technology sector, because they are very big in promoting technology in Singapore lah, at the moment. Right? So you want to look at the opportunities there as well, which are not available here in Malaysia. Right? And the good thing about, of course, you also have direct access, like you in Phillip Capital, you can also trade US markets, right? Because US markets, okay, new there, but US market, I got Tesla lah, I got all the other big BYDs and all that, right? But at least Singapore is our neighbor lah, nearer. Okay, and because their performance in their currency is almost as good as the US, in fact, better than the US compared to the Malaysian ringgit, right? Because Malaysian ringgit now at a historical low against the US, against the Singapore dollar. But we are also quite close to historical low of the US dollar already, right? So it's quite near. Right? The performance of the US dollar against the Singapore dollar is quite near. Okay, so give you exposure of forex exposure in the Singapore market as well. Okay. Okay. Now, any questions here before I proceed? Yeah. Yeah. Got also lah. So when you go to this list, you'll see companies like Top Glove, IHH is there also, right? But as a Malaysian, why you don't want to invest in the IHH in Singapore? Here also got the same. But what I'm talking about, don't listing for other companies like US lah, Philippines lah, or whatever other country that's listed in Singapore, but not available here in Malaysia. Right? So this is just example, not all only. This example, you want to get the full list is here, right? On the Singapore, on the SGX website. Okay. Any more questions before I go to the last part lah? Later we can look at it. Okay, I will show you the website that you can go to. It's absolutely for free lah. a website that you find information on Singapore market. That's what I'm going to go to the next part. Okay. But before I go there, any questions? Online, do you have questions? AI stocks, of course, all these companies is in the front end will not be available here. It's probably in the US only, mostly, right? But we want to see that the technology that supports AI, okay, mostly chips lah, right? Semiconductors, for example, or maybe like because one of the things, if you look at Nvidia, for example, right? Because they are basically, they started with graphic cards in computer, but their processing power is very powerful, right? That to power all these algorithms in AI. So that's why you see Nvidia and some of these other companies that produce all these processing equipments, right? They have gone up like crazy. Okay, but the problem from Malaysia and Singapore is that, like for example, our semiconductor, they mostly provide all these components to Taiwan, right? Maybe US very little, okay? But like we all don't provide to Nvidia, right? So we want to see that part is basically you have to go still look at the US market lah. Yeah. But remember AI, I think it's overhyped already. Okay. Market is always like that one, right? When everybody talks about it, it's probably too late already, right? It's like glove lah. When everybody talks about it in 2020, it's too late already. By the time you go in and AI buy Nvidia and all that, right now, I think that's it lah, right? So you have to be very careful lah. Whenever for us is we try to identify trend before it starts, right? When it's really moved, really, when everybody talks about it already, I better be fearful a little bit, stay out a bit. Okay, that one you have to come to Equity Striker lah, we'll tell you. You have to come to Equity Striker lah, we'll tell you lah. Because there's so much things to cover, right? I'm only focusing on the Singapore market, please. We are talking about Singapore, right? Anything else? It affects everybody lah, basically. It does, but you look at the performance is still quite okay, right? Despite, I mean, you look at market as rebound in Singapore, but Malaysia has come down, right? But remember that Singapore actually exposure in the foreign market is higher. So anything that happens, especially in the US, because they are very good trading partners with the US. But Singapore also is a good partner for China, because China is very big now. Remember I showed you the figure? Okay, so they are like divided on both sides. Okay, so for them, it can be a risk lah. Yeah, it can be a big risk lah. No, not at the moment. Okay, are there any questions? No? Yeah, I just showed you just now what? 3.45, 3.46. Yeah, this was 2 days ago. That one is a growth rate. This one 3.456. I think now 3.46 lah. It's a historical high, not very high. Is there a cap? I'm not sure about that lah, whether they want to cap it or not lah. It's like what Malaysia did. No, I'm not sure about that. Not sure about that. In the long run, historically, it will never come down. It will come down temporary, yes. Short term, yes. There's always correction, right? But you look at the long term trend, it has been going up, right? Unless there's a change in Malaysia lah. No lah, Malaysia is again problem is politics lah, Malaysia, right? Instead of driving the economy and having policies for economy, everybody just want to keep their seats, right? So it's very tough lah. It's very tough. But if there is a change, it's going to take a long time lah. Definitely also. So by the meantime, we're still going to be like that lah, right? We look at a long-term trend, we are still going to be weaker against the other currencies, right? But hopefully that will change in the future lah. We do not know yet, right? Now, of course, all the thing that we see is historical data, right? When it comes to forward thinking, is a little bit difficult because we can only continue to get information from time to time. I mean, I cannot predict, right, how Malaysia is going to do in the next 5 or 10 years. I don't know what's going to happen also. I mean, I don't know what's going to happen for me tomorrow also. Okay, so this is the risk that we take when it comes to investing, right? But we use all this data to actually help us to minimize that risk. We can only minimize our risk as much as possible, okay? But we can never eliminate risk one. Okay.
You will show an example of, let's say,
Mm.
Singapore-based companies what to do economy.
Mm.
Second one, what to do.
After we look at it, the second part, the last part of the presentation today. Okay, I'll show you the REITs, I'll show you some of the stocks. Then you can look at the financials over the past 10 years. Okay, and it's all for free because it's actually a collaboration with Equity Striker with SGX. Okay. Okay, so if there's no question, I think we'll take a short break, maybe about 10 minutes or 5 minutes, just a toilet break lah. Yeah. 5 minutes will do. Yeah. All in. Sorry? Oh. Okay, can we start? Okay, it's probably gonna take another half an hour or so lah. I don't want to keep out too long also. Yeah, I know it's very difficult to stay along also for. I mean, 2 hours is quite long to sit down, right? Okay, I'm just gonna share with you this website. Again, like I said, this is actually a collaboration with SGX, right? So we developed this tool because we already have data for Singapore market. So now we're just providing this lah. So make use of this now because you can get a lot of information from here. All right. I'm just going to show you how we do it now. The whole website, there's no registration or whatsoever. You just have to go to sg.equitystriker.com and start using it already. All right. But I'm just going to show you the reason we created this is to make things easier lah for everyone to find information, right? To find investing or trading ideas. All right. So it's not a very complicated tool. It's supposed to be easy. So if you log into the website, you should know how to use it lah. But I'm just going to explain to you what it's all about. All right. Because there are other websites like SGX website, they also have all this data and all that, but it's sometimes very difficult for us to navigate through. There's just too many features on the website, right? But we try to make things as simple as possible lah. Right. So whether you have a laptop or even your handphone, you can just go to sg.equitystriker.com. Right, but handphone one you will not see so clearly lah, right? Laptop one then is much better. So Brian is going to help me to pull up that the website.
Mr. Kenny,
Yeah.
1 minute, I haven't copied down
Yeah, you can.
the website address. I
Oh.
haven't copied down.
Okay. You can take photo if you want. sg.equitystriker.com. Yeah. Nowadays we use technology, everything very fast. Yeah. I'll show you lah. I'll show you. Yeah. Oh no, I thought you write down already. I thought you write already. Huh? Anyway, you lose it. Okay, so this is how it looks like lah when you type in, right? It's sg.equitystriker.com. Now, what we did is a very simple tool, right? If you look at the top here, there's either stocks or REITs. Okay, we separate them because you know the way we analyze REITs is not like how we analyze any other companies, right? Because REITs, remember, has a mandate to give back the whatever profits to the investors again, right? If they have profits lah, of course they minus all the cost expenses and then they will just give back lah, right? But they have the mandate to give back lah. They cannot hold back. Yeah. Guru is like a guru lah. So you want to look for REITs in Singapore, you go to the guru lah. Okay, it's just a marketing term that we use lah, right? Just put REITs there, it's not sexy enough, right? You see guru only, you click lah. Okay. So what happens if you browse? Again, want me to? Can I use your laptop to browse? Okay, can. All right. I hope you guys online also are able to see and use this. Maybe I have to see it like that, right? All right. So sg.equitystriker.com. If you go down, there's quite a number of things. This is basically all the it's a scrolling menu lah, right? Again, you don't need to come here, but I'll show you where to get this. So we have stocks and basically REITs. These two only. All right, only these two. Okay, I'll show you how it's being used. So there's some articles, there are some contents that we push here once in a while, so you can just come in and look at it lah. Right, and then below is basically the information about our company and all that. Right. There are also, if you are interested in Singapore, we've also created a Facebook group. It's called Singapore Market Campus. So you go to this website, you can just click any of those links that's related to the Singapore market. Right? You just have to go to this website, and at the bottom are all the other resources lah, including the Telegram group by SGX themselves. So you want to get updated information. You see this button here. This button are all clickable, right? So I click this, I can join the SGX Telegram group. Okay, so this is a group is from SGX themselves, right? They will provide you information from time to time lah, right? What's happening in Singapore and all that. Singapore Stock Exchange. Okay, then we have the Facebook group here. We also have the Instagram. So these are all social media that you can go to relating to Singapore market. All right. Okay, so I'm just going to go up here. So when you go to stocks, I'm going to start with stocks first. You can just click on this menu here. Okay, so if you look at the bottom here, the whole idea for this website is for you to find ideas, right? Again, this is not recommendation. This is not advice or whatsoever, but these are ideas based on certain conditions, lah. Right? So here we have separated both into trading ideas. So trading, as you all know, is for short term, right? And then we have investing ideas at the bottom. These are for long term lah. All right. Now, if you look at this, the write up, okay. For example, what do you mean by rising stars? Right. So we try to make it easier so that you don't need to define those filters and find those stocks yourself, right? So we just divide them into a few categories. So rising stars means the net profits has grown over the last 3 to 5 years. That means there's growth in profits. So I'm looking for companies in Singapore that have growth in profit for the past 3 to 5 years. That's rising star lah, right? We have growth in profits in the past 3 to 5 years. Then if you look at dividend kings, these are companies that pay dividends consistently. All right. So they have profits, they have dividends, and most importantly, positive operating cash flow, right? Because if the company doesn't have cash, also they're most likely not going to pay you dividends in the future, lah, right? And this is continuously for the past 5 years. So we are looking for consistency, right? Then we look for this list of stocks, right? I'll go through with you in a short while, right? These are mode defenders are basically company that has high margins, net profit margins, lah, right? So this is at least 20% over the last 3 years. That means every year is over 20%. Okay, so you're looking for high net profit margin companies. If you are looking for more stable one where you buy stock where you have a lot of cash, then you have companies that has a lot of cash. These are companies that have a lot of cash, right? Continuous heroes are basically very, very what can I say? Very stable companies, lah. All right. We are looking at the long-term sustainability. So this one is over 10 years that they have posted profits every single year without fail. Like now, we just spoken to a gentleman at the back there, Genting, during pandemic also don't lose money, right? Okay. So if you look at this list here, for the past 10 years, they've been making profits, right? Uninterrupted, that means every single year they make profits. They also, every single year also they pay dividends. So during pandemic also they pay dividends, right? And then of course they have operating cash flow for the past 10 years as well. So these are more like stable ones, lah. All right. Yeah. So you just have to click. You just have to click on it, then you get the list, lah. All right. So for example, let's take a look at continuous heroes, lah. Now there's a lot of data once you get this here. So what you see here is a summary, right? Now let me see how many in total first, lah. Okay. Wait. Okay, so there are a total of 69 companies, lah. Okay, 69 out of the 700 companies in Singapore. So, but these are all the companies. So if I want to get more details, right, I actually just click on that company. Now what you see here is a summary. I'll just show you first, lah, because this is sorted by alphabetical order. Let me go back to, sorry. Yep. Yeah, hold on. I'll get into the details in a short while. So I'm just going to go back here first. Maybe we look for a company that you are familiar. Any company that are familiar here? Okay, CapitaLand, Grace. These are all the stable ones. In Equities Tracker, we call this investment grade companies, right? Because 10 years they have been very, very stable in terms of profits, in terms of cash flow, and in terms of paying dividends, right? So if you look at this data, right? Okay, so you all know. Okay, let's take a look at one. Which one is it? Oh, Great Eastern. So you look at Great Eastern. This is the latest closing price. Because this is updated on a daily basis, by the way. This is their market cap, right? It's an $8.5 billion company in Singapore. This is their dividend yield based on current price at the previous financial year end. All right. So you look at this. We are looking for consistency. This company, Great Eastern, has been posting net profit uninterrupted every single year for the past 23 years. Profitable, right? That means they've gone through during the subprime mortgage crisis in 2008. They've also been profitable. All right. And then dividend also they've been paying for the past, out of the 23 years, they paid 22 years of dividends. Okay, 21 years, they always have positive operating cash flow. Yeah, we'll show you the detail in a short while. Well, also, see, 23 is all at least the 10 years one, but most of them is like 20 over years one, like for example, Hong Leong, 23, 22, but operating cash flow is positive some years, positive, negative some years, right? But generally they have been quite good, right? SBS also, right? SBS, all the transportation, the bus and all. DBS? Yeah, but DBS is a much bigger company. Like you see, it's 10 times bigger. Yeah. But only that, 23. These are all of these companies here are these are considered big companies already, right? They are very stable. We call them investment grade companies, right? But of course, this kind of companies, you will not see share price like that one. They are very stable, only one. All right? Okay. Operating cash flow. But like for example, Hotel Grand is 20. This is hotel, and they managed to get a positive operating cash flow over the past 23 years without fear. Positive, that means they have no problem paying, running their operations. Okay, COVID time also positive, right? Okay, so this is helpful for if let's say I'm looking for opportunities, but of course you have to go to the details lah, right? So if you want to go to the details, for example, I just have to click on, let's say go like Haupa lah. Okay, Haupa, when you click on this, now when you click on this is where you can get all the info. So we have financials, yearly one, we have quarterly financials. You can actually compare this company with another company side by side lah, right? Who are the shareholders? All the capital and dividend information that you receive for this company, and who the directors are. All right. So you get 10 years of financials. So that if I go to the financials, right? First of all, you'll see the graph. So we try to make things easier to see lah. Okay. So we have their revenue, their net profits, the lighter blue one, and then we have their operating cash flow. All right. Okay. So this is basically, so you can see lah. So 2019 and 20, then although the net profit and revenue came down, but they're still positive because zero is down here. All right. So they were still profitable lah. This whole thing they were profitable. The whole time in the past 20 years, 10 years or so is also always positive operating cash flow. All right. But during bad times, all will come down a bit, right? Okay. But they still managed to hold. It's still positive, Okay. Then if you don't look at the figures, it'll be down there lah. So this one is just the graph, right? So you want to look at the profit, the financial statement, profit and loss, cash flow and balance sheet is all here. All right. So you can look, this is quite steady. In 2012, their turnover was 139 million. And then now it's 182. Steady growth only one, right? It's pretty much steady one. Haupa is a big conglomerate, right? See, the profit is there, right? Then you can, you look at the net profit, then you can calculate what kind of margin, right? We don't provide the ratio here, okay, but that one you have to calculate yourself, right? So net profit is here, so it's very steady one, right? 100 million, okay, sometimes 180 million, 140 million, around there, they've been profitable, right? Then if you look at the cash flow statement, you can also see the dividends that they paid. Okay, so the reason why we do is then at one glance it's easier to see, right? The latest one is always on the right here, okay, then that one is 10 years ago, okay? All right, so in Malaysia, we actually charge this as subscription, but for Singapore market is free, right? This data in Malaysian market we charge. This one is free. Malaysia about 200 ringgit. If you just want the data, it's 600 ringgit a year, 50 a month only lah. For the Malaysian market.
Malaysian stock market doesn't go up.
Yeah.
Oh, Singapore you are free.
Yeah.
Why? You be Malaysian free, ma?
Because we love Singapore, ma. Okay. We just hope that Singapore will one day sponsor us lah. Like I said, this is a collaboration with the SGX. Okay. Yeah. Sure. You got more. Actually, Malaysia got more. Yeah. Yes, all this. Memang have one. This is standard. All right. So we have the financial statement are the three lah. Profit and loss, cash flow statement, and balance sheet. All right. So you can see the operating activities, investing activities, but of course these are numbers, right? You have to dive down a little bit deeper and see what they're investing, and see what their what their capital expenditure and all that, right? So usually the cash is always there as well, right? This is a cash flow, and then you can also calculate. So in our website we put a lot of other ratios as well lah. Okay, but this one we just want to provide the raw data. All right. Which one? Yeah, so where did you use the cash? So they use the cash to invest lah, okay? There's some investment, so you need to find out what the investment is. I do not know. All right. This is their balance sheet. Okay, for those who are looking at financial statements, so all the information are here lah. Wait, I want to see where's the the capital and dividends is the other side. Okay, let me go through. Also, you can look at quarterlies if you want to. All right, so that one, the top one is the older one. This we have 5 quarters running. You can see the quarterly results are also getting better, right? Okay, you want a more detail, then this is so on the quarterly result, we only provide the turnover and the net profit lah. Okay. And then you I'm not going to go to comparison. Comparison is just to compare with another company. This is basically looking at all those in that sector itself lah. Other companies in the sector, yeah. So you have the others as well, right? Then you can click on the company to get the information like what you see earlier, right? So this one you compare we've divided them further lah into subsectors lah, right? Even in our in a Malaysian website, because when you look at sectors given by Bursa Malaysia, they are quite wide. For example, consumer products. Wow, all the telcos are there. Everything is in there. So we divide them into subsectors. Okay, like pharmaceuticals over here. This is Singapore one. All right. So these are some of the basic info. Like I said, if you want more info, just click on the company. Again, most of these companies I don't know who they are also lah, right? This is probably a China one. Okay, this is in US dollars, so that means that this is probably a foreign company. Yeah. So remember, in Singapore, some of them is in US dollars, some in Singapore dollar. Okay, so I can just click and look at all this info lah, right? I'm just going to go up here back again and then look at the capital and dividend info. Okay, so we have a heat map for these are all the capital info over the last 10 years or so lah. All the dividends that they've done, they've paid. See, so this company quite predictable lah. Okay, 1 year they pay at least 2 times one. Okay, 15 cents, 15 cents, 15 cents, 50 cents, right? And then if you look at quite steady lah, 15 cents never fail one. All right, and normally they pay in February and in August lah. When they announce the dividends, February and August. Right, so this is like a dividend heat map, right? For those who are looking at dividends. Now, one thing that one of the things that I've actually for me lah, I don't know what you guys is I also created a dividend income portfolio, right? Because companies pay dividends in different months. So what I do in my portfolio, I look for companies. For example, this is February and August. Then I look at another company that has maybe paid March and September, so that every month I will get dividends. And this is what I do lah. Yeah. 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 Same. I'm not sure about that lah, because there's I asked my tax consultant before. Now the thing about me is I don't trade I trade Singapore directly because I have a Singapore bank account. So my money is all kept there lah. So I've not gone into that, but when I bring back the money back, then the tax fellow say there's some implications which I haven't found out yet lah. So that one you have to ask the tax consultant. I remember it was quite complicated one, right? But if you take out money quietly, okay lah. Eh? Like this company pay February and August, right? Maybe Genting pay in April and October. So I buy Genting. I have a few companies, so every month I got dividends. Yeah. Instead of every like 1 year lah, or twice a year lah. Yeah. Yeah, so I create a portfolio, maybe like 7 or 8 stocks.
Oh, you mean you buy stocks 7 or 8 stocks?
Yeah. Yeah. Yeah.
Oh, I see.
To create a portfolio where I get dividends lah. Like my dividend investment portfolio is mostly REITs.
Same stock, same what? Same how to say? Same family, you create a portfolio for the same stock, right?
No, it can be different stocks. If you want to diversify, you buy ETFs or REITs lah. REITs, I'll show you the REITs one later. Yeah, you can see the dividend yields and all that also lah. Yeah. Philly Capital, I'm not sure. You have to ask Philly Capital lah. Because like I said, my one is I deal directly the broker in Singapore one, right? So because I have an account there, so I trade there also. Because I used to work in Singapore for a number of years. Instead of closing the account, just leave it there to invest lah. Yeah, but not big lah, not big. All right. So again, I'm just outside of this topic here, but I'm just telling you that is how I build my dividend portfolio lah. All right. So these are dividends that they've paid. So you can go all the way back until I think should be about 10 years lah. All right. So even 10 years ago, they pay like 14 cents, 6 cents. So they have increased a little bit, right? Because it's not like 20 cents. 10 years later, now they are paying 30 cents, right? But it's quite standard one lah, the dividends payout. Okay, so basically this website here is for you to get information, right? Number one, if you look at the filter, I'll go back to that later. Then you'll see, then you can filter down later and do your own due diligence before you make any investment decisions lah. So these are all their shareholders. Of course, we did not show their percentage in holdings, but these are their main shareholders lah. Right? It's up now on a quarterly basis. Okay, like all this information, they normally only disclose this on the year-end financial statement. So we get it updated on a yearly basis. Of course, the prices, dividend yield, and all that is updated on daily basis lah. Okay, we only update on the quarterly financial statements as well. Okay, so let me go back here. Okay, so if I want to look for, let's say, companies, remember I showed you there's now continuous heroes, right? So you have the list. So this, you don't need to write anything, right? Just go to the website, you get all the info there already. Okay. Then you go to, let's say, moat defenders. These are companies that has high profit margins. And you can see that there are, how many companies are total? Okay, there are a total of 29 companies. These are all companies that has high profit margin. And you see the margins are all there. I'll just show you. Okay. This is the average 5-year net profit margin. This is how we filter them out, right? Because margins is not every year, it'll be different one. Okay, but average is 20%, at least 20. Like this one here, the latest profit margin, this is Straits Trading Company, mining and metals, because metals, commodity prices were high, right? Was 59% margin, but the average is about 25% margin, right? So this year is quite a lot, maybe, because they have the commodity prices or steel prices have gone up a lot, right? That's why they get bigger margin, right? And then we have Cocoland. They are quite stable one, but this one you see, like for example, Tuan Sing Holdings, real estate, suddenly the margin dropped to 2%. The average was 23%, but because remember, property is also very cyclical one, right? So latest means the latest financial year, right? And we are now in 2023. So these are mostly are from, you can look at the data, financial statement, this latest one. Yeah. Yes. So you want to look at the details, just click. You have to look at the, actually this is just a front screen, right? So you can go to the details and look at their financials lah. Yeah. Yeah. So, so this is the latest one, right? Actually, the revenue not much growth, but the operating profit has gone up so much. Maybe there's some sell. Yeah, you have to look at the net profit to loss. Suddenly the profit has gone up so much, right? So you look at the. You just have to find out why the margin has gone up so much. This is what already? Straits Trading, and this is trading steel one, metal. No, that was Straits Times. That was Straits Times. I'm not sure where to get this info from. But so you have to make sure, because previously the margins is about the same 25%, but only this one is so much. I think there's a what? 2021 lah. This is the latest one lah. Yeah. Remember during COVID time, metal prices gone up like crazy. Commodities prices in general went up a lot. Right? Even today, metal prices are still quite high lah. Supply issue. Okay. So you have to go into I'm just showing you the tool, right? It's basically giving you ideas, but you have to go to the detail, right? So the best thing is, maybe you ask a Singapore analyst lah. You already filtered out the stocks, right? But you want to know further. You want to do it yourself, then you can. There's a lot of research to be done lah. Okay, but the best is, if you're a stockbroking firm and any Singapore analyst, just ask them the question lah. The simplest, isn't it? Right? Then they can answer for you. Because I'm not an analyst, right? I'm only for Singapore stocks. I only hold a few stocks only in Singapore, not much. So I told you all the SIN stocks I own. Okay. I only disclose one, right? Cannot lah. I cannot tell you everything lah. Because after you follow me, susah, I lose money after you blame me. Yeah. Thai beverage is one. I already say Thai beverage, right? No, it's Thai beverage. Yeah. MSC, smelting. MSC, oh, then you have to subscribe for us, 200 ringgit a month or 50 ringgit a month. You get MSC lah. You can find information other places lah. You can, but you won't get this kind of data lah. You can. It's Zoom. I'm not trying to sell my service or whatever, but you just get the info lah. Right? Yeah, we'll update this lah. Whenever we get financial statement, we'll update them lah. Like this one. See where's the latest one. They don't have quarterly lah, so this is half yearly. Yeah, so this one is the latest one is 2022 lor. The end of 22 not in yet. Probably the next few days or next few weeks you get it lah. Yeah. Metal trading lah. I guess so, because I'm not so sure about these companies. So if you want a basic info is here, but if you want to have more info, you just look at Google lah, right? So there's just a simple write up here, right? So there are 4 segments: resources, real estate, hospitality, and others. Yeah, so others. Yeah. No, I already share you one already. Enough, Cannot, then after it become investment advisor. Pay me what? I cannot provide investment advice. I don't have a license. I only manage one for you only. Cannot. Can get in trouble. Can go jail one, no. So I don't take any risk. Yeah, when it comes to regulated industry, I think like Philly Capital also no lah. I cannot simply say things on. Okay. But remember, today's session is about Singapore. Please focus Singapore. Okay. I think so. They have plans. I'm not sure. I don't really follow. I just put their money in. Okay. Oh, that'd be good lah. Then you have 2 SIN stocks, additional one. It's under Thai beverage. Okay, so the rest of it, let me see what else you want to see. Oh, I'll show you after the next part. Yeah, I'll show you that one after. This part okay, quite simple. You just have to go in and just look at it lah, right? Yeah. Okay, so now So you want to look for dividend companies, it's here lah. This all pay dividends one lah. And then you can sort this by dividend yield if you want. I think this is already sorted by dividend yield lah. This is micro mechanics, this is semiconductor. Right? And then again, you click on the counter. Okay, Thai beverage is here as well, right? Okay. Then you look at Thai beverage law. Okay, and you look at the screen here, there's also a charting tool here. So this is a charts lah for Thai beverage lah. Right? And then this is basically this is actually trading view chart, which everyone is quite familiar right now. Then you can go long term, no? How do I know? You said it lah. No lah, no, I think it's quite easy to use. Okay. Okay, so you have an idea lah. I'm not going to go through everyone, but I'm just going to show you the next part. These are the trading ideas one. This is basically this one, right? Okay, so I'm going to explain this. So now the investing ideas is based on fundamentals. Okay, this one is based on technicals. All right, so I'm just going to share with you a little bit from here. Okay, this too is pretty much understandable. Now, rock bottoms, these are stocks that has fallen at least 30% from the 3-year high. All right, so I can look at this. So when I click at this, guess which company will come out at the bottom? Good stock, you have to look at the detail. This is just a filter from for criteria only. Okay. So Top Glove is now 91% down from the 3-year high. Malaysia is the same lah. All right. So that means this we call it rock bottom. That means the share price has gone down rock bottom lah. Okay, at least 30%. So this is sorted by the biggest to the lowest lah. Yeah. Oh, that one. Is it so now investment advice today, right? But if you ask me, I think the glove industry is going to take some time to consolidate. It's going to take a long time to consolidate. Yeah. This dual listed. Yeah. They are listed in Singapore also. It may not drop further. It may drop a little bit more, but it will just stay sideways for some time lah. It may. Or it may go sideways, because the problem with the glove industry is during the pandemic, even the Chinese start to produce gloves, so there's too much supply right now. All right. So even creative technology, right? You still remember they do sound speakers and all that computer stuff, right? All of that actually come down quite a lot, Okay, so if you go to the last page under the 766 companies here, this is 31. So this is again all those 30% and above. All right, you get this list lah. Okay. Now whether the company is good or not, you have to go and look at the details again, right? But at least it will tell you, these are cheap companies. But now you have to find out whether the company still has value or not. All right, then it's worth, right? Because they're really cheap. Okay, that's very interesting lah. Right? So it's up to you how to use this information, and I can't teach you how to use this information. I can show you what they are only. Okay, so these are rock bottoms. Now another thing that we've done is to have this thing called tradable stocks. Now it doesn't mean that stocks not in this list cannot trade one. They can trade. Okay, but the criteria is basically this. Okay, you always have to look at the criteria. Okay, can you see the criteria here? Number one, we filtered out stocks that is above 20 cents. That means stock below 20 cents don't have one. Okay, because it's very difficult to calculate the liquidity and volatility if the stock's below 20 cents. Too speculative already. So this one, it says what? The average volume and volume is more than 500,000 shares a day, averagely. That means these are all stocks that are quite active one, right? Because in trading, you need two things: volume, volatility. Okay, movement and volume lah. Okay, so this one is now average weekly volatility is more than 4%. That means every week it at least move 4%. Now in Malaysia, my criteria is actually 8%. But if I put 8%, you don't have any stocks in Singapore. That's why I told you Singapore is very not so volatile one. All right, and you look at this criteria, the number of stocks here is not that many lah. 500,000 shares a day. Yeah, averagely lah over the past 1 year. Okay, so you see like this, some of the stocks. So there's only 29 stocks, right? that met the two criteria. Like I said, if I put the 8% volatility, Malaysia one, I still can get 50, 60 stocks. 8%, but if I put 8% here, 0. Okay, so this stocks volatility in Malaysia, Singapore market is small. All right. But if I'm going to trade those shares, if let's say on trade short term, if I'm looking for volatility, this is the best that you can get. All right, for short term trading. Okay. It doesn't mean that you have to, this is just a filter, right? Okay, now that is the two. So the other one is more refined. This is more detailed, like, okay, again, you always have to look at the write up, the explanation, how we get it, right? Because this is a filter, we already pre-filtered it. So uptrend support opportunity is basically stocks that has pulled back in an uptrend. Okay, uptrend already. This rock bottom lah. This one is stock uptrend, but now come down. Okay, this is a correction. So I'll show you an example. So again, this is just purely technical, right? Okay, so now we also divide that trend into short, medium, and long term. So short term is based on a 30-day average, moving average. This one based on 90 days. This is based on 200 days. Okay, so you can, so now this one here, you look at this column here is the short term 30-day. So that means Sembawang Corp, for example, this company is in a short term trend based on a 30-day moving average. Okay, if I'm going to click, let's say the medium term one, kosong, right? 200-day one, kosong also. Okay, so that means now you only have this. So I can click on this, and this is also a tradable stock list. That means, remember, this company is also inside the tradable stock list. That means they meet the volume and volatility criteria. All right. So I click on this. Let's see how the chart looks like. Okay. So uptrend, right? This is what we try to filter now. Price goes in an uptrend, and now he has pulled back. And it's pulled back to the moving average. Okay. So now whether you want to buy or not is again entirely up to you, right? But we have filtered out this. You know that number one is in an uptrend. Okay. And now he has pulled back. So technically, you buy lah. And then when you set your target and order is entirely up to you. But we just filter out the stocks based on these technicals. Right. So this will be updated on a daily basis. You just come here on a daily to see what other stocks that has really pulled back lah. Okay. So that means uptrend and it has pulled back to the moving average. Okay. Okay, so we call this thing pulling back as uptrend support opportunities. Okay, now if you want to find the bottom one, we call it downtrend oversold. This is downtrend. Okay, this is uptrend. This is downtrend. That means price go down, oversold already. Okay. Let me see whether we have any or not. I'm not sure whether you have any. No, this is we look at rock bottom. It can be any price as long as it's below 30%, right? From the 3-year high, so that's long term lah. So this one is price has gone down below the average, but way below the average. Okay, I'll show you an example. So we have a few here, right? Like Hong Kong Land and Top Glove. Okay, let's take a look at Top Glove. Since we all know Top Glove, right? And we all love Top Glove, right? Okay, now why is it in this list? I'll show you first. Okay. All right, see this is a 30-day moving average, the blue line. Okay, so it has gone down the moving average, but can you see how far it moved from the moving average? Okay, so this is again, if you put RSI, so we use RSI as the oversold indicator, so that's why it's in the list. All right, so the RSI go below 50 or below 30, that's why it's here. So if I'm trading this, I probably want to expect a technical rebound, isn't it? Remember, it's not like buying and holding long term. This list here is for short term trading. That's why we call it trading ideas. All right. So from here, if I want to buy at the bottom here, I'm expecting the price to go up, rebound back to at least the average. That's the idea. Okay. So this list, remember, this whole website is for you to find ideas. That's all. It's not telling you to buy or sell. Right. You still have to make your own decision, your own strategy, your own plan to buy and sell. Okay, but it helps you to at least filter out a lot of noises out there lah. Okay. So if you look at, let me go back. There's another counter, right? Hong Kong land or something. Yeah. Okay, you should see almost similar movement like Top Glove. You see? It's in a downtrend. Okay, and it's oversold. Quite low already. But this one go lower some more. Okay, so here is where you need to strategize. Like maybe you wait for a reversal pattern like candlesticks or whatsoever, then only you decide, right? Again, that's entirely up to you. But what it does here is to filter out these stocks on a daily basis. Yeah. Yes, same thing. Okay, you get the whole thing back again. You want to look at financials, same thing lah. Right? You go back on top here lah. All the details are the same. Okay. So now, you see, the term that we use, right? Of course, it technically, okay, like we said uptrend buy opportunities or uptrend, downtrend buy opportunities. But remember, we cannot say buy, right? Because buy is like an advice of buyers. So we call it opportunities lah. Opportunities means opportunities to buy, right? Then you have to decide whether you want to buy. That's up to you. For price that has really gone up high, we call that alerts. Be careful. Okay, your definition is whatever you want to define it lah. But I cannot say sell lah. Okay, so uptrend overbought is simply price that is in an uptrend but it's very high already. All right. For example, let's say look at Dynamac. Okay, it's an uptrend now. Remember, it's an uptrend. Okay, but high already. Now, how you know it's high? Remember, RSI is above the 70. That's high already, no? Okay, like here when it's high already, we expect a pullback. 30 for short term lah. And then we have the 200-day long term one. Right? So we can always look at whether we have short term or long term or medium term lah. Yes. Maybe your one is trading something. I don't know. It's a setting lah. I think it's a setting. Huh? I don't know. I'll just take a look at it and see can or not lah. Okay. Alright, so short term, medium term. Medium term got one. I'll show you after. See. Long term don't have. Okay, so medium term is based on the 90-day average, right? That means this price has gone up actually quite a lot lah. Okay, this is like spike, right? This is way much higher. Okay, so it's called alert is because I mean if it's really overbought, you're not supposed to buy there lah. Okay, maybe you wait for the pullback or whatever. See? So this whole website is basically just for you to find ideas. Okay, especially if you don't know Singapore market, right? You just look for this, but it's better for you, like you say, go to the financials and look for more details later lah, before you decide to invest or trade. Okay? Why do you use 90 days? This is just it's a standard technical analysis practice lah. 30, 90, 100, 200. Yeah. 50 is still considered short term. 30, 50 is about the same. But you always, when we do analysis, we always look at the trend lah. There's always, actually, 30 is quite common because it's almost like a month average, right? Yeah, 90 is like probably about 4 or 5 months average. The 200-day one is quite relevant because that's a long-term one, and a lot of fund managers, they also use 200-day moving average as an indicator to tell whether the market is in uptrend or downtrend in long term. Yeah. No, not MACD. This is to know whether remember the price, whether it's overbought or oversold, right? Whether it's an uptrend or downtrend. That's all only. Okay. This is to filter out lah. So at least I know that these prices are already quite high, right? This is short-term high. This is medium term. That's one, right? And 200-day moving average don't have lah. Okay. Then the other one is also an alert. Remember, this is an uptrend. That means stocks go in an uptrend, right? Yeah, uptrend like the one I show you, price going up but very high. Okay. Then you can also have times when there's a downtrend, but it's at resistance also. Now, how do I see this? Let's take a look at Ascendas REIT. Oops. Okay, you should see that this stock is in a downtrend in the short term. Okay, it's in a downtrend in the short term. Now, why is it called an alert overbought? Because previously it was this low, and then it's rebounded to the average already. Remember, the trend is still down, huh? Okay. So when it pulls to the moving average, this be careful, because we may have another selling opportunity again for people to sell. Okay, so this is not like the uptrend very, very high one. This is downtrend, but it's considered overbought based on the short term, based on the 30-day moving average lah. All right. If you look at another example, oops. Okay. DBS has also rebounded from the low and now it's at the average lah. Okay, but remember this is short term only. Okay, so it's already come up here lah, right? Okay. So whenever the price trend is in a trend, in the downtrend, whenever it rebounds, you're supposed to buy at the bottom lah, right? Remember, it's a downtrend support. That's where you should look at it, right? At the when the RSI is below 30, but now RSI is go to the 50 level already. In a downtrend, is considered overbought. All right. So again, it's how you interpret technical analysis is up to you. Okay, but what we try to filter is whether the price is high or low in an uptrend, or whether the price is high or low in a downtrend. That's all only. Okay. All right. So yeah. Yeah. Of course, for fund management is generally long term. So FA comes first. Yeah, FA comes first. Actually, fund management, the most important thing is your allocation of your portfolio, right? Because if you put, let's say, a portfolio with all banks, then you still have risk exposure only to banks lah. So we have the different kind of grades of stocks that we put in so that it has a balanced portfolio. You mean for the number of stocks or that one? You can go to SGX website and find those information. Yeah, I don't know how many, what's the percentage in sector. Oh, equity sector is depends because we don't have a fund for Singapore yet. It's all personal one only. Yeah. But like I said, for me, normally during uncertain times, there'll be more consumer stocks in my portfolio. Okay, but when the times are getting better again, there'll be lesser consumer stocks, but more growth stocks. Now still consumer stocks. Not yet lah. I still feel that's not yet lah. All right. But when the time comes, I think not. But I think the time is going to come soon lah. Because remember, when US start to when the inflation rate in US start to go to 2%, that's when they'll start to lower interest rates, and that should start to spur economy again. And remember, we are also downtrend in 2 years already. Yeah. If 1 more year, maybe we can still tahan. If it goes down for another 2 or 3 years, we also cannot tahan already. All right.
Do you think recession is coming?
Malay Bank Negara said no recession.
No, Bank Negara.
Huh? Hey, from Bank Negara, I know. They are better than me. Huh? Who? Larry King. You know what? Don't believe WhatsApp. Don't believe whatever you read on the internet. Right? Just rely on the data and facts. Right? Bank Negara, Federal Reserve, you have to respect them. They know what they're doing. Okay, but of course, their forecast can be wrong also, right? There's no such thing as correct one all the time. Yeah. All the analysts, yes. Yeah. Yeah. But not Malaysia lah. You're asking about Malaysia, no lah. No, not necessary. That one is big lah. But Malaysia has gone down for many years already. How low can we go some more? That's a question. Okay. Anyways, I'm just going to show you the last one. This is REITs. So what we did was, okay, this one got no filter one, but here you have the different kind of REITs. This is the sector yield. That means office space. You know, like office in Singapore is crazy, right? So they still provide the best yield. dividend yield, right? Next best one is retail, diversified is many different one. This is data center, industrial, healthcare. So now most of these actually Malaysia also have, right? I mean office, retail. The only thing that Malaysia don't have is the data center. Okay, and now of course the properties allocation is also different. Okay, so this one when you go and dive deep, right? So let's say I go into office REITs, these are all the office REITs. Okay, these are top 8 high, but the bottom is all the REITs that you can see. So the one that is highest is the prime US REITs. This is US US properties, right? Manulife US, and then all the rest of them. So if I want to go and look at the detail of the REITs, right? So I just click, for example, prime US REIT. Okay, I'll get those info here. Okay, so this is their gearing ratio. This is their occupancy rate is now 90%. They have 14 properties in total. These are their latest dividends that they have paid, right? And then you go down some more. Of course, all their properties is in the US lah, right? 14 properties in the US, and where they are, these are their properties. Okay, these are all their properties that they own. Of course, you can go and Google and search where they are and all that kind of stuff. This is, and you can see this is occupancy rate also. Right, so this is basically more like a property investment kind of stats lah, right? Because REITs is actually property investment mah, right? This is their total net lettable area, and this is updated on a yearly basis only. Why? Because when we get the reports from them, the annual reports, then only we can publish it. Okay, so this one is I think up to last year one lah. Okay, you can look at okay, 1 year return is down because we look at the charts. Okay, the thing about REITs here, they don't have the charts here for REITs. All right, we have the stock charts. Maybe I should go and ask them to also put the charts here for REITs lah. Because REITs supposed to be a longer term investment, that's why we don't put the charts in. Okay, I'm going to go back here. Let's take a look at another one. You can compare also. Let's say I want to compare. Let's say these two. Okay, Keppel REIT. Okay, and OUE commercial REIT. Okay, so I click here. I can search Keppel. Where's Keppel REIT? Oops. Okay, Keppel. And let's say I want to compare with what is some more? OUE commercial REIT lah, let's say Okay, compare, and then you get a side-by-side comparison lah. Okay, so this is basically the year-to-date returns for one is Keppel REIT, the light blue one. This one is OUE. So it's still in the negative zone for REITs. Okay, because property has not been well for the past few years lah. Right? Look at the occupancy rate for Keppel is 95%, OUE is 91%. Okay, where they are at. Oops. Okay, so these are both our office REITs. You can so look at the dividend yield is about the same. This is a price. The market cap for the REIT, this is a bigger REIT. 11 properties altogether is 7, and so on and so forth. Right? So this is just to give you a glance of a view of what those REITs are all about. All right. So we go into the detail where we also look at where their properties are and so on. Right? So I can go into Keppel REIT and look for more details, right? Okay, I can always go back here and search also. Let's say I'm going to look for Keppel again. Keppel REIT. Okay, this one also most of their properties are okay. They say they have properties in different countries, right? 6 in Australia. There is 4 in Singapore and the other one here in Taiwan, I think. Yeah, South Korea. Wow, South Korea, they have one. iTower. Okay, this one will just give you an overview of what iTower looks like. All right. So we go into the detail on what REITs they actually own, right? And then you, of course, you have to do your own due diligence and see. Okay. So basically, this is what the website is all about. Like I said, you don't need registration or whatever. Just go to sg.activities-tracker and just play around with it, lah. All right. Okay. Yeah. So I hope that you keep on using this because this is what actually SGX want us Malaysians to do more. Okay. Going into finding more about Singapore companies and REITs. All right. Any questions? Oh, it's already 1 p.m. But any questions? I see if online if there's any questions or not. I know that it's already 1 p.m. You all want to go back already, right? I also want to go home. Too long sitting already. Okay. But building this tool is interesting, huh? Of course, it's free. It's interesting, lah. When you say pay already, yeah, pay one.
Yeah, there's only one question
Yes.
from the online, which
Okay,
is Singapore going to be the next Hong Kong in the few years?
that one you have to ask the Singapore government, lah. But personally, I think they are. It's very fast because Hong Kong is really breaking down, in my opinion. Right, and the next best financial hub, Asian financial hub, will probably be Singapore, already, lah. Yeah.
Yeah, I believe that's all for the online question. Do anyone have any questions to ask Benny before we end our sessions?
Okay. No questions.
Yep. If
What is that? Until when? I don't know. Just use it first, lah. I mean, don't worry because no registration, nothing, right? Just use it first, lah. Okay. Thank you so much, everyone, for attending. We'll see you
Yeah.
again. All the best to you guys.
and there's a feedback form in your goodies bag. Please help us to fill out the feedback form. We would like to make some improvement from all the seminars and maybe the venues and so on and so forth. So you can either pass to our reception outside or pass to me. Yep. Thanks a lot.